Now we can rock and roll. I apologize about that, ladies and gentlemen. All right. Welcome to Market Monday. If you're tuning in with us on YouTube, we appreciate you guys very much. Hope you get a lot of value out of today's session. We got a lot to cover. If you're with us in the day trade room, I was just explaining a 15-minute bearish setup that we took or that we called out. I don't know if anybody took it. If you took it, I'll count it. If you don't, I won't. It's not a big deal for me. I did take this trade. I took this off the option. Um, Took it half size because it was 20% risk. And so this ended up going up and making 73%. I ended up stopping this thing out right around $5 for 41%. So really good trade here with that double 5 minute. And double 15 minute. We're actually getting another 5 minute setup here. We'll see if this ends up playing out as well. But what I'd want to do is drop my puts. Go at least into 09. So I'll drop into some lower value puts here if you wanted to take that or not. All right. So let's look at where we're at, what's going on in the market, what we can talk about from here. Obviously, we've had a parabolic move over the last couple of days here in the markets. For better or worse, just moving straight up. We've had some great trades. Like we took a trade in shop that worked really well. We're kind of sideways still in McDonald's. If you got later in McDonald's, you're making money. If you're in it from our original entry, you're basically break even. Berkshire's close to a stop. And then BJ's looks fine. We just got into this the other day. What's interesting is the setup that we currently have here. Now, one of the things that we need to understand is what it means to be extended in the markets. What does extended mean in the markets? So you'll hear people be like, oh man, the market's so extended here. What we're talking about is how far away you are from your moving averages. So if we pull up just our normal, what we call our three moving averages, we use the 8, 21, and 50 because those are outside the 50. The 8 and 21 are Fibonacci sequence numbers. Some people use a 10 and a 20 and a 50. They're roughly around the same area. What you'll notice on typical healthy trends is we ride that 8 and then pull back to the 21. And we ride the 8, pull back into the 21. Ride the 8, pull back to the 21. So on a healthy market trend, that's typically what happens. Eventually, you get tired. You get a bigger pullback into a 50 EMA. And that kind of causes concern because usually you take out a previous low and then you see, do you continue the trend, right? So if we look back, I mean, even from May of last year, you're typically riding that 8 EMA. On the downside that we just experienced, here's this drop, move back to the 8, drop, move back into the 8, drop, 8, drop, 8, drop, 8. Here's the move up, pull back to the 8, pull back to the 8. Explosive move. Friday's high had us about 2.9% from this 8 EMA, if you actually go to it where we were located as of Friday, which was about a 3% pullback. And so what this is telling you is that the market could have a 3% pullback to this 8 EMA, and that would be healthy and that would be normal. However, if you get a 3% drop in the S&P and you're bullish, that's not really the most fun thing to hold through, number one. Number two, it freaks all the people out. So everybody on TV, all your talking heads on CNBC and MSNBC and all the different Fox businesses will be like, oh, the market's pulling back. Is this going to be a V top like we just had a V bottom? And we don't know. And so a lot of it's speculation until we actually see something happen. It would actually be really healthy to get this pullback, especially if we could hold these highs. Well, notice where these highs are located. If we come all the way over, that would be close to that 8 EMA. And so what we'd really want to see here, and what I like setting up, is this bullish move Friday. We have a bearish Harami. I would love to close bearish Harami today. I don't know if we do, but I would really like to. If we do, tomorrow, I would like to get a little higher open, take that low out, and then drop to fill this gap. The next day, drop again into about 7,000. And then let's go sideways for a day or two and pop Monday. That would be an ideal scenario. right? So this would be Monday, Tuesday, Wednesday, Thursday, Friday, Monday, and we get bullish here. This becomes our risk, and we look for this move back up and just retest all-time highs. That would be an ideal scenario, in my opinion, right? You're like, well, you just said you don't want to hold all your bullish trades through that. Most of our bullish trades have either stopped us out or hit targets, right? We still have Walmart we're in, we still got BJ's, but what I'm looking at is if we get a healthy, normal pullback on the market, a lot of the stocks that we're also stalking, like a Netflix, like an Amgen, um, your big name, your mega tech companies, right? Amazon, like this is so parabolic here. 28% move. And you can see already dropping down, trying to get back into this 8. You're already down 4%, right? So if this drops back down to this 8, I would love this into this 235 area. Kind of retest this gap and then keep going. A lot of these are going to have earnings in the next 2 weeks. And so we want to just be mindful of those earnings. Any of these earnings could really pop the rest of the market. But you're going to see, like, I mean, AMD wildly extended, Google wildly extended. All of these big name companies need some type of pullback. If these companies pull back, like if you look at a Microsoft here, this is a transition. Let's go to, let's get these moving averages off so you can kind of just see the chart better. So here's our highs. Here's your downtrend, right? We broke a previous high. We're in transition. And so does this high hold as support? Personally, again, I would like to see this pull back into 400, see what happens on earnings. Hopefully it's not a crazy event that explodes higher. And then once we get a trigger, take a long to go retest this 440, which is our gap open from this earnings report. If not, get back up into 480. And so a pullback here is very healthy because it gives us the opportunity to get in and have something to put our risk against. Does that make sense? So a lot of times when we're looking at stocks, the mindset that someone has, like, all pullbacks are bad. Pullbacks aren't bad. They're opportunities to accumulate more in a bullish environment. It's opportunities to stop out of trades in a bearish environment if you're bullish, or take the opposite side of the trade. So we got to see what this looks like on the markets. But if we can close red today, which is Harami, right, for us. So if we could have a Harami day where we're fully inside Friday's candle and then get a continuation move lower, I would like that. The only downside is we need to manage the bullish positions that we do have. And so we'll talk about that as well. So this is the S&P. You zoom back out on the quarterly, mammoth move. What's crazy is, and we talked about this, every time we've gone quarterly engulfing since literally 2008, every time we've had a first quarter bearish engulfing, we've had more downside. We haven't got that yet. Now, I'm not saying that we don't. We don't know what's going to happen in the Middle East if Trump does blow up bridges and infrastructure and all the things. If we get into a multi-front war, I don't know. We don't know what this is going to look like. But we could have some kind of global event that does drop us, and then we end up going double bearish engulfing. If that's the case, now I'm honestly looking to drop into 48. But right now, we're bullish. Right now, we're bullish. Monthly chart, good pullback. Again, V bottom. You can see that on the weekly. If market makers and powers that be wanted to implement maximum pain on people, what they would look to do is go to a V bottom and then immediately go to a V top, come back down and take out this low. That would inflict max pain in most people and in their trading accounts. But remember, there's always a process stocks go through to see that. And so what we want to do is see what that process looks like for us. Dow, Great move up. Not quite into all-time highs. I do think we at least get the Dow back into all-time highs. If you'll remember the White House during the original Epstein hearings, we're like, why are we talking about this? The White House or the Dow's at 50. That's what we should really be focusing on. So I'm still thinking that they're going to try to push whoever is going to try to push the Dow up into 50, go take out these highs. This is where all your shorts are still located. But notice that sellers at 49.6 still showing a lot of resistance here, right? Tons of resistance. We broke through it once, but this 49.6 area is stout. So a normal pullback here would make a lot of sense. If we get a trigger, this is where we want to get bullish on a 30-minute trigger. So what does that look like, Mark? Great question. That would look like this, then breaking that high, taking that bullish long off a transition from the smaller time frame. And then from here, we're looking at probably getting into something around 49, all the way back up into 50,500, right? So what we'd want to do if this gives us that setup on the Dow is trade diamonds. This is DIA. I have not recharted this in quite a while, as you can tell. But this is the all-time high that we'd want to be getting into. This is roughly going to be your monthly resistance. And we'd want to kind of come back into this 486 gap. So again, I would love to see this gap fill, then move up into 505. Take a position somewhere around 490, have about a 2% risk, 1 to 2% risk for this move up to make, let's say we're risking 1% here to come up and make 3. That's a nice 1-to-1. Another way that we can take this is if you go into our inverse ETF list, SDS, that's the ultra short hedge. All right, this is the Ultra Shares Dow. This is a leveraged, I think it's a 2x leveraged. I think this is 2x leverage. What are we at today? Yeah, this is 2x leverage. And so again, if we were to get the pullback here, I like this. It's significantly cheaper than diamonds. Now, I would trade options on the diamonds. This is significantly cheaper. So you could actually utilize this at $57 per share. Just know it's a 2x leverage. And so if we were to get that same trigger at 58, you're risking 2%, but your opportunity is up at 7. So we'd be risking 2 to make 7 if we got that bigger pullback for the continuation move. And you can see this follows the Dow Jones almost exactly, right? Same looking chart. We want to see that pullback, get the move up. If we got that pullback trigger here, you're risking again 1.2 to make 3.5. So if we come back over to DDM, you'd be risking 2 to come up to the all-time highs and make 7, right? So this is another way to take that trade. It's 57, probably going to be trading around 57.50 when we get a trigger versus $492. So you can essentially get 10 to 1 on that, right? Which if you have a smaller account, gives you the ability to leverage it. If you have a larger account, it doesn't matter. And if you're going to trade options, also doesn't matter. You can still trade DIA. What we'd look to do, you can see that we have tons of open interest here. Bid-ask spread's a little bit wider than I would like to see, to be honest with you. But you could do credit spreads, debit spreads, calls, doesn't matter. It's going to be fairly liquid. So these are all things that I want to start, ideas I want to start kind of seeding in your mind so that if we get these pullbacks, you're primed and ready to take advantage of it. Does that make sense? By the way, if you're watching with us on YouTube, feel free to chat in the box. I'll glance over there every once in a while and look at it. I don't have my camera on today because our office is a huge mess. It is a huge mess. So we're moving. Boxes are outside to start moving. All right, where do we get to? Let's go to the NASDAQ. See where we're at here on the NASDAQ. We're already taking out yesterday's low on the NASDAQ. And why? Because remember, NASDAQ is full of mega tech. So your Apple, Nvidia, Microsoft, all your biggest companies on the planet, they're NASDAQ right now. So if we get this bigger pullback, that makes a lot of sense. We're in all-time highs. Again, I would really like, there's our fresh all-time high. Let's get rid of this guy, this guy, and this guy. All right. So what I'd really like to see here again would be a pullback kind of into this 26,000 area, maybe 25.8, which are these highs, this monthly level. That'd be a great area to hold, if not 25.5. The pullback in the NASDAQ is going to be determined by what happens on your mega tech. One way that we could trade this, because if we go look at these big techs, almost none of them are in all-time highs right now. So the NASDAQ is in all-time highs. What do I mean by that? The old all-time high was back here, right? So we're still above that old all-time high. We haven't had a full pullback yet. You go look at your mega techs. Let me move this guy over here. We go look at a lot of our mega techs. Even like Tesla has a lot of room to go, right? We're 22% away from all-time highs. Amazon's probably the closest to all-time highs right now. You were a percent away from it. Now you're 5%. Google, we were 3%. Right now we're about 4%. Nvidia, largest company on the planet, 5% away from it, right? Whereas before we were 21% away from it. Apple, 5% away from it. Meta, you're still 15% away from all-time highs. Microsoft has a very long way to go. I mean, you're 25% away from all-time highs here. You go to other chip manufacturers. AVGO is pretty close here. TSM might be the closest. This is 4%. TSM, 6%. So what I'm trying to get at here is all of these mega companies, they're not even participating in the market yet. We're in transition. These guys are not in highs. So if these companies go to all-time highs, we will probably see the NASDAQ run up into 28, 29, 30,000, which is wild. Like if Microsoft goes crazy and catches that runner, Nvidia pops into all-time highs, Apple pops into all-time highs, Meta get its feet back under it. We could easily get to 30,000 on the NASDAQ. So one way that we want to take advantage of this, same situation as the Dow. Now I'm not calling for 30,000. So don't go and be like, Mark called for 30,000. I'm not saying that. I don't know how hard we would go based on allocations, but it would go significantly higher. All that being said, the way that we want to trade this, same thing. We're looking for a pullback. We could go to QQQ. I would love that to hold this 629 area. So again, we want to see it pull back, then see the move higher, take the bullish entry. This gives us our risk reward that we're looking for. So we would have a risk with a potential reward to all-time highs, right? Just to go retest highs. And then if those other companies go, a ton of upside here. So that's what we're looking for. That's what we're looking for on the indices. Again, QQQ is a great way to take advantage of that. If you go back to the inverse watch list, we come down here, TQQQ. This is a 3x leverage though. So you'd want to be careful with this. This is 3x leverage. So a pullback, you're probably looking to here and then come up. You might be looking at a 7, 8, 10% risk. But again, let's go to volume. Highly traded. I mean, you're in the hundreds of millions of shares per day traded, which is huge. So you're not going to have a problem getting filled, but it's also a lot easier for a lot of people with different accounts. So if you've got a smaller account size, this allows you the ability to buy more than one or two shares. Where if you go to QQQ, this is $600 a share. So maybe you could buy two or three of these depending on your account size. Whereas if you go to the TQQQ, man, you could buy, again, 10 to 1 and get a better leverage off of it. So great way to trade here. If we get the pullback in the rally, last but not least, we got the Russell in all-time highs, and it does not care. This thing's rocking and rolling. Small caps look great. We're leading the way higher on small caps. This is fun. Still need a pullback though. So let's mark our new high. Still would like a pullback kind of in this 2,700 area. I'm not going to chase this at highs, but this looks fantastic. It just needs a pullback. Same situation here. Put your EMAs. We are 3% away from our 8 EMA. This is extended. There's a lot of room. Again, extended means there is a lot of air. There's a lot of space between where we're at and our 8 EMA. That is extended. Most of your healthy trends either go, a normal pullback goes to the 21 EMA on most healthy trends. Now, why does this work? People like moving averages because of a theory, and this is one of the things that we talk about in Zero to Trading, so go review your notes on Zero to Trading. But the whole reason that EMAs work is something called reversion, if that's spelled right, to the mean theory. So if you get too far away from that average, you pull back to it, right? If you go too far away to the downside, you pull back to it. Too far away, you pull back to it. Too far away, you pull back to it. It reverts to the mean. It reverts to the average. And so the question is, what average is it reverting to? And so the entire market at this point needs to revert back to its average. Can it keep going strong? Yes. And that's where standard deviation math comes in. Standard deviations basically says, if you think of standard deviation, we talk about this in options. Anybody remember college or really good teachers in high school that grade on a curve, right? So you got your bell curve, and this is where the majority of people are. It's 1 standard deviation, 2 standard deviations, 3 standard deviations, right? We are having from this move a 3 standard deviation move. This is not normal. And so we're way over here, and what we need is this reversion back to here. Does that make sense? It's quiet in this church today. It is quiet up in here, but that's okay. Thank you, Ryan. All right. Now, if you're not a math person, you're like, dude, math, you're losing me. I understand. It's all good. I just need somebody to talk to me a little bit. So this is where we're at. All right. Gold pulling back a little bit here. This is healthy. This honestly looks really good. From a moving average standpoint, I really like this. You're basically above your 821 and we're moving sideways. A pop higher, I could look to get bullish gold. See where silver's out on this too. Is this holding? Silver looks fantastic. Now, we've been talking about getting bullish silver, and I know some of you guys have since back here, right? Now you're over all of your moving averages. Do you guys see that? You see how the green's above the 8, above the red, green above the blue, above the red? Follow through higher here. We take out this high from last week. That now opens the door for silver to get back up into 90. So kind of this area becomes your target. When we look at the weekly, this is our weekly target at 90.30, whatever this is. So if we go bar to bar, we're looking to get to 84. I didn't want to do that. Duplicate. Bar to bar, we're looking to get to 84.62 and then 90.38. Then we want to get to this monthly at 96. Beautiful bullish Harami off the month. Nice looking trend so far. All right. Let's look at SLV. I like trading silver with SLV. Follow through up. Let's see what this looks like. But if we pop tomorrow kind of into the $75 area, I wouldn't mind taking a position with a stop underneath all these moving averages, this little cluster. So it'd be about a 7%, 6.5% risk to make 9, 14, 20. So 6.5 to make 9, 14, 20 is nice. That's good risk reward. Let's see if we get follow through on it tomorrow, though. Let's see if this gives us follow through tomorrow. If we do, then we can go from there. Statistics 101. It is stats. Is there an ETF to trade the Russell? Yes, IWM. You can trade the Russell with IWM. This is what I typically like to use. In fact, we were looking at getting short IWM back here. And we wanted to swap into a bullish. And this, again, it just kind of gapped and ran away without us. Any pullback here would look great. And then I think URTY is the leveraged ETF. I think this is a 2x leverage. 3.7. That's a 3x. This is a 3x leverage. So you want to be careful here because the Russell moves anyway. Oh. So be careful if you do take this one. RSP, that's the equal weight. RWM? That's short, Russell. Yeah. So you'd look at URTY. But again, this is in your inverse ETF watch list. So just go, if you don't have it, go download it from the enhanced membership. All right. Coming into our trades, we got McDonald's. This is sideways. This is still fine. We're treating McDonald's. The reason that we got into this is a channel with a slight uptrend. And so what we're looking for here on McDonald's is holding essentially this 302, looking for the move up, move up, move up. And we actually got that move into 310, but that's essentially where we bought it at. So if we zoom in, our entry date here, I think was this day. Let me review my notes. Yes. All right. So this is the day that we got into it. It dropped, almost took us out, and now we've rallied. You're basically break even on this trade. So right now, this trade is down 0.3%. Not a bad thing, right? This isn't terrible. Some of you, I know that you got stopped out because you just had a GTC in, which is fine. And you got back into it back here on Wednesday. And so if you got back into it on Wednesday over here at like 415, you had this 1.7 risk, you're up 2%, you're up set 0.7, right? So depending on where you got into this trade would really depend on how you manage this trade. I still like this. This is fine. I love the bigger volume coming in on Friday. And if you notice these bullish moves here, bigger volume, bigger volume. Now this went a little bit lower, bigger volume. Today we're selling off, real low volume. I would like to see, ideal situation, I'd like to see buyers step in and push this thing up, close somewhere around 310. So in an ideal world, that's what I'd like to see. That's what I'd like to see. I'm in this trade until we drop, down here. So it is what it is. I'm in this trade until we drop all the way down. So let's see how that plays out. Berkshire, this one had some funky price to it. Let's go to, what do we call out here? Stop loss is a close below 474. We have not closed below 474, but we're in jeopardy of doing it today. I will stop this out if we close below 474 today. All right, so just give you a red line. Let's make this like blood red. There we go. I'm going to get rid of this guy. That's our stop. So if we close below this level, I'll get out. Make sense? Now, what does that give us? Basically a 2.3% loss. All right. So this would be a 2.3% loss. What we were watching for was this hold. I mean, if you look at this, this is just a gorgeous channel. And we're still in support, by the way. But this is a beautiful channeling stock. We've essentially held this area since last August. We took this trade. I think we took this trade up too. We took a couple of these trades earlier, already made money on it. I'm very much willing to risk 2.4% to make 4.6. This is a 1 to 2. This looks great. So let's see what this does. We will wait and go from there. Okay. Shopify. This is fantastic. There's zero wrong with this trade. This is another channel that we took. We got into this trade on the 13th. This was a 6% risk. Currently, we're up 16% almost. So 15.9%. We're up 15 plus percent. Good job, Charmaine. Charmaine just made money on this. Now, what's cool about this, if you position size your account correctly, let's say that we do stop out of McDonald's and we lose 2.5%, but you just got out of Shopify and you make 16%. The 16% here not only covers the 2% loss, but a heck of a lot more. Does this make sense? So if I risk $1,000 on Berkshire and I lose 2.3%, and then I risk $1,000 on Shopify and I make 16%, I make way more money. That's the goal of trading. This is why when we take a position, we take it, we position size roughly the same, number one. Number two, we always want a risk reward where the risk is less than the reward, hopefully by a 1 to 2 margin. So if I'm risking 5, I'm trying to make 10. If I'm risking 6, I'm trying to make 12, right? And so that's playing out here with Shopify. I do like this. I've got a stop loss at 127 right now. I've already taken a lot of this off the table. From our entry, we took some of this off at like 124, 127, 133. I want this back into 136. I'm roughly at an 20% position size. I've taken about 80% of this off the table from when we originally started. This is in channeling resistance though. And so if we looked at this from a channel perspective only, there's your move up and your pullback, move up, pullback, move up, right? We're in resistance. We would be expecting it to drop. However, when you look at a bigger picture, you're in an uptrend. This is a good push. If we take out 136, that triggers us off of monthly, which goes engulfing. That's my bigger target. And then I'm looking for this to come all the way up to 155, 162, and maybe 182 eventually. So wanting to see this push, this pullback, and then that continuation. That's ideal. That's ideal. So let's see if we can grab that, okay? Charmaine, is that your first winning trade with us? Oh, you already took profit on it. Okay. Good job. You'll give it up for Charmaine. She's brand new, so first winning trade's always fun to have. First winning trade's always fun to have. Congratulations. And everybody else, that's your first winning trade. Congratulations. It's always fun to have those. You'll have a lot more of them as we move along. BJ, this is fun too. This is a channel. This is fine. So we have this potential channel around 90. Now, this goes a little bit lower. That was a terrible line. Let me actually draw a real line. So we got some bigger support down here at 88. We were watching this 90 because it's a quarterly level. And you can see this is a stock that likes to channel, right? We've come back down, hit support, going sideways, moved up. This looks fine. We got a trigger. This is a 30-minute trigger, gap lower, and now we're getting this continuation. I'm fine with this. This trade looks great. I'm happy here. Now, the downside of this is if the market rolls over, this could roll over back into that $88 area and stop us out. Because our stop's down here, I think at 89, right? This should be. What do we say here? Close under 90. So we're looking for this close under 90. If this rolls over and stops us out, that's fine. I'm looking for this to come. If it comes back to 88 and comes back up, I will take this trade again. This is too pretty of a trade to not take. Now, if we look at the weekly, this looks good. I really want to take out this weekly high. Let's duplicate this. I really want to take out this weekly 93.90. That opens the door now for your next weekly target to go into 98. So let's see if that plays out. And we'll see how this goes. Netflix, stalking this like a cheetah on the savannah. This looks good. Let's see if 94 holds. That was essentially this low. Right now it's not. Maybe we come back to 90. If we come back to 90 and this holds and gives us a trigger, we could look at buying something here. I like what we're getting though. And so what I want to do is I want to take this 193 area. This is an alert. I want to move this down to today's high. So I want to have an alert at today's high. I really would like for this to go sideways for a few days. Now, the reason I'm using today's high is because that would be the break of a previous high for the start of a potential trigger. I would need to go look and see, what's my EMAs doing here? Are they crossing up? Do I have a higher low in play? What's that actually look like? So I want to have an alert here just in case, so I can go pull it up. We could come on down to 90 if we come back to 90 and hold. So this drop into 90 and pull back up. If we get a trigger here, I would look to take that with 90.58 being my stop. That's a very easy stop because we have this large wick and then we have all of this support from kind of mid-March. So a pull back into that area and move up. I will take that trade. This would be my stop loss, and I would look for this to move back into 100 and then the gap fill into 106. Those would be my trades. We're getting to Tesla. I promise, Kathy. I promise. I'm just kind of going down our list right now. Amgen, this is one that I found through the week. I really liked Amgen. We've got a potential transition here on the daily. If you go to the weekly, I loved this setup hold. So we've got a nice looking uptrend. So here's this low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now we broke that low, but look at your support here at 350. And if we zoom this out, this is holding really, really well. Like this 350 by 340 area. That's holding up. We took out that low, rallied back up. You've got this nice bullish Harami off the monthly. If we were in a normal pullback on a day trade and I saw this, I'm getting bullish, right? Now we took out that high. So I want to see what we do here. I'm going to give this a couple of days. We do have earnings coming up next week, so that might pose a problem. But I'd really like to get a close above this 355. Notice that we have not closed above 355 since we got below it on 318. It's almost like just a ceiling here. If we can close above that, I would look at potentially taking a long position, depending on where we're at with earnings. And that's about a 3.5% risk to make 3.5, 6, 8, 10. All right, Tesla. This is your question here, Kathy. Great pullback on Tesla. This looks awesome. Earnings is in 2 days. So I'm not taking a trade here until after earnings. I want to see what that does. And you're like, well, Mark, what if earnings is fantastic and it goes to the moon? Because SpaceX. Well, he'd be the first person that does it. I'm just kidding. I'm kidding. It could. I don't know. If I miss it, I miss it. If I'm not on the ship and it jumps, I miss it, right? That's part of trading. So that's part of swing trading. Now, if you're looking at this and you're like, Mark, I love this. I want to take a bullish position. I can't say stuff like that on YouTube, kind of. I think that's illegal. If I look at this and we can hold 380, even through earnings, and then pop, I would take a position here and look for this thing to come to 460, 500. These shorts have not gotten taken out yet. So there's still a lot of short selling here on Tesla. We just got to watch and see how does this play out. But I do like this 380 area. That's where we held back in November. That's where we blasted above back in September. You can see all of the attempt to hold essentially from February, March, got back below it, right? Now, let's say that earnings get sold. If earnings get sold and we drop back down into 320, great. I'll start to look for a longer term entry down here. Number one, my really Mark would just absolutely be super thrilled level would be back at 300. And so if earnings is terrible, which again, sometimes you get big gaps on these and we get back to 328, that's what I'm looking for. That's what I'm looking for. Okay. So we'll see how this one plays out. Let's see how this one plays out. Again, earnings, if you're in it, man, I hope it goes, I do. I hope it goes to 500, but earnings is a crapshoot. And so when you have companies like a Microsoft, which we'll look at in a minute, you look at this earnings report, they estimated to make $3.87. They made $4.14, and then they actually dropped whatever this is, 12%. That, people like that doesn't make sense. It does because they took profits. And so they're driving price down to a better level so that they can get a better entry. And so I've seen companies, man, they just absolutely crush it, and their guidance looks fantastic. Nothing is wrong with the stock, and they drop 20%. So this is why I don't swing trade through earnings. Now, if you're long-term investing, that's a completely different story. You have to hold through earnings. So I kind of want to see what this 380 does. Maybe this 350. Best scenario is we actually come down into 350, but we hold support and then turn up to fill that gap. And the reason is that would keep a higher low in play on the weekly and finish off your transition on the daily. Then we could take kind of a position against it here. That's your stop. You'd have a really low stop, fill the gap, try to go take out this high, and then keep running. Once we take out this level, regardless if we drop and rally If we gap up and pull back, I'm going to look for a longer term position back into all-time highs. I'm going to look for a position back into all-time highs. So if we can clear this level on a, if it gaps above it through earnings and then pulls back to it and goes, I'm taking a bullish position going to highs. If we gap lower, but we hold this low and turn, we can take a bullish position for the gap open, the gap fill, take out these highs, and then on any pullbacks, that's where you want to add to try to get back into 500. But we've got to clear this level. This is the attempt at a transition, right? So remember, usually, not always, but usually you've got your downtrend, you break those highs, you pull back, you break that high, that completes your transition into an uptrend, and then you keep moving. So a pullback, this would be your swing trade transition to take out the high. If that occurs, you just move your stop up. And then on pullbacks, you take pullbacks with higher levels of confidence to go take out these remaining highs, 429, 460, 480 all-time highs. So that's what we're looking for. All right. All right, man. NAC. Got some people asking questions on YouTube. Let's check out NAC. This is a parabolic type stock. The easier move once you cleared 154 was into $2. I would not be taking a position here. ROTCO Punt. I don't know how to say your name. Sorry. I wouldn't be taking a position here, but if you're in it, I would be moving my stops up, right? So I would have a stop underneath today's low at 2. And then see if we can't come up. What I would imagine is you're going to find some resistance at 226, and then I would be looking for a pullback, continuation trade, take an entry here and look for that move up into 252. So I hope that makes sense. All right, I'm going to speed up just a little bit. Big fan of nuclear here. NNE, great move up, pullback. This is holding. If we get follow through here, I would like another day or two in this level. But if we can get follow through here, I would not mind starting a scaled position. Again, this is a transition that we're seeing that's trying to turn into an uptrend. Here's your downtrend. Here's your low. Break a high, pull back, higher low, broke a high. That is a transition. Here's a current pullback. If we can get one more day of sideways action, then a break higher, I would look to take that long, trying to get up into 28 and 30. And depending on how we close today, this might be a good one. Look at your volume, by the way. Look at buyers coming in. Since this big move off the 13th, lots of institutional buying coming in above average. I like that. Oklo, same thing. Oklo's not as pretty. You've got this giant inverted hammer. Still trying to hold up. I would like a hold over 66. Let's get LEU. Centrus needs to get over 210. I think NNE might be my favorite in that group. We'll keep an eye on that. Prime moved without us. That was sad. CRISPR, still waiting for that to come back into support. Walmart is rocking. Good move up on Walmart. Can't do anything here. I'm not going to chase this. But you are kind of in a potential channeling resistance. I added space to our watch list. This is Virgin Galactic. There was some news that came out. It's like Virgin Galactic's going crazy. But if you look at it, like it's not going crazy. Like this is down 99.999%, right? Like this is not going crazy. Let's see what if I can click here. Yeah, you're down 99.78%, right? So I can speak to that here in a minute, Clayton. I'm looking for a continuation here. If we can continue up, I think from a weekly standpoint, we may be able to channel again back kind of into $4. This would be 12 to make 36. I would wait for the break up here, though. This is a good hold from 4.6. So we've got a decent hold here from April 6th. I would want to take out last week's high before I did that. Now, what's great about this is it's crazy cheap. I mean, you're talking $3 entry here. So you can scale this, but you're looking at a 13% risk. You'd want to come up for a 21% gain, 29% gain, and then possibly like 41 to 58% gain, something like that. This is a good mediation point. You see how we kind of get into that dotted area and hesitate? See all that hesitation here? So a great first trade would be into 3.4, 3.5, and then see if we can't come up here if we get above 3.1. So I'm going to watch this one. Don't trust Palantir yet. Cloudflare. Monster is the best performing stock of all time, I believe. Which sounds crazy. But if you go look at it, I mean, this has had tons of stock splits, all kinds of stuff. If you just go look at its history, it's up that thousands and thousands and thousands of percent. People love those energy drinks. It's the 666 on the can. Have y'all heard that conspiracy? That's funny. This is a good pullback here, trying to get that transition. From a weekly standpoint, I like this. From a daily standpoint, I don't. See what happens here. CVS, I wanted that to come back to 75 and see if we could channel BETR. Somebody asked about BETR. It was Dave. Dave, if you're in BETR, you're hitting a target. I would for sure take some profits, move my stop loss up here. 45 was that bigger target off this, 313 entry. I would take some gains, move my stop to, I don't know. I mean, that's a big stop. That's 11%. Killing it today. Depending on your entry, I would have that stop loss up at 39-ish, 39.50, and then see if we can't go take out 50.63. And then any pullback, I would add to it. Any pullback, I would add to it. Amazon waiting on a pullback. This is a great zone, by the way. This is really nice. Look at your two areas of resistance here. See that? If this goes sideways and turns, you're taking out 258. Ideally, we drop into the 235. You say, well, Mark, why is that ideal? Because we still have support / resistance. You've got this gap. And the reason this is ideal is because for us, if we take that trade, if we take a trade here, we're making 4%. If we take a trade here, we're making 9%. I would rather make 9. And so I'm waiting on that pullback. Same on AMD. Their goal is 300. Google, if we can pull back on Google into 320 and turn, that's, in my opinion, a layup into 350. Nvidia, almost the same as Google. The fact that we finally cleared 186 and 191, like the getting above this 191 was huge. If we can get a pullback into 193 and turn, I will take that long into 212. That would be my target. Apple looks great. This is keeping the entire market afloat today, which is kind of Apple's MO. Need to pull back on Meta. This is still channeling, by the way. This is crazy. This channeled from 600 to 670. We're still in that channel. Like this is just an anomaly right now, but we're back underneath it. We've got earnings coming up, so let's watch that. Microsoft, I love this chart. This is a transition. We got to see what earnings does, but a pullback into 400 and turn up, I'm looking to take that into 440, 480, and 5. AVGO, I'd love to drop into 380. Let's see if that happens. They are going to be gunning for 422. That is a $2 trillion market cap for them. That's what they want. Let's see if they can get it. Boy, I'm running behind today. Running behind today, man. I've been teaching too much. Got in that teacher mode. But as long as you learn something, I guess it's all right. ET's fun. Just waiting on pullbacks on a lot of this stuff. AIG, I'd love a pullback here. Back into support. Coke's not bad. 428. This looks like a trigger off a channel, potential channel. You do have a higher low here. 1.8 to make 3. There's not a lot of profit there. It's 1.8 to make 3. So, I mean, you're making, almost a 1 to 2. And then if it breaks, you're going higher, which is nice. Just now getting a 30-minute trigger on this too. I'm going to add this to our watch lists. This has such a low risk. It might be worth looking at. I don't think I went over TLT, did I? Are these recorded? Cindy, these are recorded. These are sent out every day in our enhanced membership. And if you're just watching on YouTube, they stay under our live portion on YouTube. GME, if that pulls back to 22, that's a rinse and repeat for a channel. Fortinet pull back into 77. Again, a lot of these stocks need to pull back. Lowe's, though, looks like we're ready to take off. Let's add this to an end of day look. If we can hold and turn, this is a move into 260. I really like this jump into 270. 266. Feel that gap? That would be pretty. Let's see what that looks like. A lot of these are going to be tomorrow top trades. We're at that 12 o'clock hour. The software here is Thinkorswim. Think or Swim. This is with Charles Schwab. MU, this could be a beautiful channel if this comes back into 357. Let's rinse and repeat that. Applied Digital, if we can pull back into 2855, I would take that as a channel. Again, if we get the pullback. Keyword if. Costco looks great. This is good for us on BJ. Again, if Costco can get up into 1020, 1030, that'll only pull BJ higher, most likely. Also, I'm going to give you guys an expectation for the rest of the week here too, and just what we're dealing with here at home. All right, what do you guys have? Can I comment on Sedge and Roku? Yes, SETG. Solar Edge Technologies. Good hold. If we look at where we're at, Dennis, are you still in here? Ofinger, you still in here? Didn't you have a
Yes, sir.
friend of your son's that bought this and you told him to sell it up here at 320 and he didn't?
Made $500,000 in 2 days.
Or did he sell it?
No, he did what I told him originally, and like I say, he made 450,000, and actually it was less than 24.
No, it doesn't show me
That's
any
pretty solid.
EPA.
Yeah.
Pretty solid. See, y'all can learn stuff and help other people with it. Because Dennis told this kid to sell the stock up here at like 325 or whatever it was. The kid just killed it. Could you imagine if he didn't? Like how hard he'd kick himself being down 88% from that level.
Well, he only sold half of it and held the rest. So
Oh.
yeah, he felt some pain.
Well, there you go. Yeah. Should listen when your elders speak, huh? All right, let's go to monthly. Not a fan of this monthly. Whoever asked about this, Mario. And the reason is we could go engulfing. So you've got the potential to drop engulfing here. Now it's a 23% move. And like, dude, that's crazy that it could go 23%. Look at your monthly moves. This is a 50% move. This is a 69% move, right? So if this goes engulfing, that's trouble. That's trouble. You do have this little uptrend that broke. You're trying to work another weekly uptrend here. I wouldn't take this trade now, but I would watch it over the next week or two. I would watch this over the next week or two. If you could hold a hammer down here, like a bullish candle, that could be a turn signal on your weekly. And you probably don't even have a trigger on the 30. Yeah. So you don't even have a 30-minute trigger on this yet. You're in support. It's not a bad area of support. But I would at least be waiting for that 30-minute trigger. You've got earnings coming up early May. But this is one of those stocks. I mean, you're going to be risking 10 to 12%. If we come back up into that weekly target, you're making 16. And then if you continue back into that monthly high, you're killing it. You know what I'm saying? So I like that 37 area though. Give this a day or two and let's see what happens with it. Notice your little trend here as well. You're kind of working sideways towards this trend. So if you're like picking up some of these lows, you're working sideways towards that trend. So let's give this a couple days. It's not bad. You know, if you zoom in on the weekly, it's not bad. If you zoom out, this is terrible. But such is solar right now. I like solar though. We can add it to the list. I like the weekly uptrend. I mean, this did get hit hard though. So see if this holds. See if this 37.50 holds. And if it does and gives us a 30-minute trigger, you could look for that move back into 43. Best scenario I think you could hope for here. Get this move up into 43, maybe 45, pull back, use this gap as resist or support, then turn back up. This would be your like super confident trade. Trying to come back up. But it's not bad. Keep an eye on it. I got Roku for you, Ray, and then we'll look one more time at everything. Roku is shorting everybody out. This is a short squeeze here. Again, this is one of those COVID stocks. It dropped 92%. You're still down 72%. This is what's crazy about these kinds of drops. This thing's up 200% low to high right now, and you're still down 76%. You still have 300% to go to get back into highs, right? This is why we don't buy and hold forever. Make sense? So I like this. This looks really good from a monthly standpoint. Really nice from a quarterly. Your quarterly target's 126 and then 230. That's awesome. Monthly target is 126, 141, 168. That looks great. This thing's coming back alive. There's no way I can take this trade here. Like, I mean, it's up 38%. There's no way I can take a trade here. But if we were to get a pullback maybe into 107, in turn, then I could take that. You're in it. Where did you enter? What's your cost basis on this? An okay boomer joke. I'm not a boomer. I'm only 40 something. 104. I would have a stop loss in at 112. If you haven't, have you taken any gains on this? Or you've like with your original size? If you haven't taken any profit, I would take profits. I would consider taking profits here because you're taking out your highs, right? And then I would move a stop loss up to like 114. Then you would guarantee yourself $10 of profit. You give yourself enough wiggle room that you may shoot into 120, 125. Yeah. So if your stop's in place, I would just move that up to around 112, 115-ish, or I'm sorry, 112-ish. Guarantee myself about $10 worth of profit. Worst case scenario, take a little bit off the table here, lock in that profit, and you're good to go. Let the rest go. That's awesome, Kathy. All right. Real quick recap. S&P. What are we going to do? I don't know. We're really sideways day. If this closes bearish, I think we drop. If we close strong, maybe we get another pop. I'm hoping that we get the pullback, though. I'm hoping that we get a pullback, though. We'll see. Gold, I want to keep an eye on this. If we can get over 48, I like that long. Bitcoin trying to claw its way back up. This is not bad. If we could spend a day or two down here and then move up, I like that. And the reason I like that, I was hoping we got this move up into 82 and then a pullback. But still, look at this pullback into highs, right? Notice that we're holding these previous resistance zones. If we go sideways one more day and then move up, I would take that bullish. This becomes my stop, and I'm looking for this move into 82. All right. IBIT, roughly the same scenario. There's your resistance zones. Here's your pullback. If this holds a day or two, you can take that long, look for that move into 45, 47. So let's see how that plays out. McDonald's. This is fine. I would love this to close at 310, but this is fine. Berkshire, most likely a stop today. Let's see how that plays out. Shop is fantastic. You should take some gains. You're up 16% on this. And then BJ looks great. If we can close strong, super happy. If we close just like we are, honestly, super happy. That opens the door to do what we call a doji sandwich, which would be that potential move. And if we were to get that potential move, because BJ can make that kind of potential move any given day, I would be thrilled. So just have a GTC in at that $96 area or wherever the first target is. We'll go from there. Everything else, I'm waiting on a pullback. I'm waiting for triggers here. Tesla, waiting for triggers here. If you've got accounts with a 213 cost basis, I would consider taking profits going into earnings because you're up 100%. So if you sold 50% of your gain, worst case scenario, you get all of your original investment back. So one of my hacks to long term personally, and I actually learned this from just a good old country boy, is he would get into trades, put his money in, get 100% return. He sold half, right? So he still has 50% of his money in, but that investment, that original investment, comes back in his pocket. Now, he didn't understand stop losses and price flow and all that, but that's pretty daggum smart, right? And so if you're in at 213 and you're trading up here at 400, if you sold 50% of your investment, you get all of your original capital back into your pocket. The rest of it's house money. Now you're just playing with the house money. Depending on how many shares you have, you could actually sell some upside covered calls against that too, right? What you got to ask yourself anytime you're holding through earnings, let's say that earnings is bad and this drops back to 350. Would you kick yourself? Right? Now, let's say earnings is good and it jumps to 460. Would you kick yourself or would you be okay? Like, which one makes you feel better? Taking profits right here, not risking the move through earnings, or risking the move through earnings? You know, let's say you take profits off the table, you don't risk through earnings and it moves up. Does that make you feel bad or worse than not doing it and dropping on a full size position? You see what I'm saying? And so do what you need to do to protect your emotions through those events. Because I literally talked to a dude about the same scenario on MU. His cost basis was 100 and we were coming up into earnings in March. And I was like, look, you're up 3x, sell half. Worst case scenario, you make a bunch of money. He didn't, he held, and it dropped all the way down here. And he reached out. He's like, man, he sold a little. He didn't sell half. And he's like, I wish I would have sold all that. Right. Because it would have saved him essentially from earnings. I mean, originally from earnings, it's only 8%. It's not a big deal. But it would have saved him 32% pullback. And then he would have been able to get back in on the channel here, take whatever profits he took, buy more for this next leg up, and make an extra 24% on his overall position. So that's kind of what I gear towards. So I hope that makes sense. Play with the house's money, man. Make your money, play with the house's money. That's what you want to do. All right, team. Appreciate you guys. I love you. I hope you have a beautiful rest of your day. Heads up on the rest of the week. This is what it's going to look like. We will have our rooms all week. Wednesday forward, I think Ramez is going to be teaching those rooms. I'll send an email out about that and let you know, but we will be moving. So I'm going to actually start loading some U-Haul boxes. And then next week, I'm hoping my office is set up enough to do some trading rooms with you. If not, Ramez will be knocking it out for everybody. Okay. So hope that makes sense. I love you guys, and I will see y'all on the DMU. Everybody on YouTube, I appreciate you. Thanks for being on. Y'all have a beautiful rest of your day. Thanks, team.